Okay, now good afternoon once again. Welcome to class. Of course, my name is Isaac. I'm popularly known as Jackpot. It's nice having you guys on board once again. And today we are going to be talking about liquidity. Basically, what liquidity is and how it affects we traders, or should I say, we retail traders. Yeah, let me put it that way. So, now, okay. Now, you see, the simplest definition you can give liquidity is we the traders. All right, we the forex traders. Now, why do I say liquidity is we the traders? Obviously, you are not there. My name is not on any currency pair list. I'm not the one moving the charts and all that, right? In fact, many traders tell us that we don't control the market. So why do I say that we are the liquidity of the market? Yeah, you see, we retail traders, our entries, our stop losses are the liquidity of the market. Are you getting that? Okay, I don't know why do we have to. All right. So our entries, our stop losses, our whatever strategy you're using, all right, most of them are liquidities, all right. And I will explain that real quick. Just stay with me. We classify liquidity with very simple examples that most of us can relate with. Let me give us number one is double top, right? I'm sure everybody is familiar with this. And then we also have double bottom like this. And then we also have our supports and resistance levels, right? So it's more like I can say that I can also use this. I'm coming. Just a minute. All right. Okay. Okay. Uh, Hold on. I'm trying to get rid of this thing. Now, we can also say that support level like this, sorry, resistance level like this, and support levels like this are all liquidity. I know it's confusing, right? Because you might feel like, oh, Isaac, are you telling us that all of these things you taught us, right? All of these, our entry models, the support levels, resistance levels that we've been looking for all through this while, are you telling us that they're all bullshit? No, 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 that's not what I'm saying. I'm only saying that these are zones that are very vulnerable. Let me put that. I think that's the right word. They are vulnerable to we traders. Are you getting it? Such that the big guys, the market movers, get rid of us in an instant. It's quite risky. Let me put it that way. And that means that imagine you want to trade like this. As a trader, you see a kind of pattern like this. Most times you would have your entry like this, right? And then your stop loss few pips above the resistance level, right? Now, you see, most times, I'm sure many of you have come across something like this. Its price will always come back like this. Sometimes sweep you off, eat your SL, and then it falls, right? That is because that zone is a liquidity zone, all right? So that is why we call it liquid. That is liquidity is majorly there are areas filled with stop losses, all right? They are filled with exits, mostly exits for traders. I believe, let me take that again. Now, liquidity zones are areas of stop losses, areas of entries and stop losses that then, it's easy for price to take out. And yeah, they are mostly entries for most price action users. Example is the double top, the double bottom, the support and resistance levels. And also, yeah, I forgot to add that we also have the trend line. You would notice, I'm sure this is not a first time thing. Price going up, and then sometimes it just happens, boom, right? Price just breaks below it, right? That is because that zone is liquid, so it has been liquidated. So you see your SL eat most times, and you're feeling, oh, why would something like that happen? What happened to this trade and all that? Sometimes you're like, oh, I've got the best strategy. Oh man, this thing will definitely work. I'm gonna make this amount today. Most times it might even fake you out. You're already in profit, all right? You're already running a profit, and it looks like, oh yeah, 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 I'm getting it right today. Oh yeah, today is my day. And then before you know it, boom, price kicks you out. Yeah? Now that is because that zone is a liquid zone, and you are being liquidated. All right. Now, since I said that, okay, all of these zones are liquidities, does that mean that we shouldn't trade again? Okay, where else are we going to see our entries aside support and resistance level? Okay, now that you're saying that we shouldn't use trend line again. So how do we enter the market? Just calm down and follow me. All right, calm down and follow me. So I think we first established what liquidity is. All right. I just want to add trend line to this list so that we then go. So something like this happens and then you're kicked out, right? I believe you're following me. I believe you're following me. All right. Regardless of the recording, please, if you have a question, is that you drop it in the comments box or you unmute your mic and talk to me. All right. Regardless of whatever is going on, please talk to me. I wouldn't like to have this class and then at the end of the day we don't gain anything. Do you get that? I'm sorry. I just want to get rid of some uh some tools right here so that we can have our class properly. Okay. Now, very quick one. How do we identify liquidity on our chart? All right, because that's the next thing. Many of you still don't get it right. All right. Okay, just a minute, please. Okay, very good. Okay, so how do we identify liquidity on our chart? How do we how do we get to see what liquidity is? How do we you know how do we come across this thing? How do we see them? How do we note them down? All right. Like I said, you just look for these areas, this mostly these three areas: the support and resistance levels, then your trend line, and then double top, double bottom, or should I call it equal lows or and equal highs. All right. So these are areas, zones that price take you out. Let me give you an example of that. Look at what happened here. Obviously, you as a trader, you see this resistance level right here, right? You would have loved to take your trade from here. Oh wow, this is a 4 hour chart, right? Quite a good time frame for entry. And then you feel like, oh man, I got the best strategy. In fact, maybe you even saw it at the tip of this candlestick, right? And then you want to trade it, you want to make your money, and you're like, oh whoa, oh my god, I'm gonna make money today, I'm gonna make millions, right? And then you place your entry. Now look at what happened right there. Price broke above this resistance level. Do you get that? Price did what? Broke above this resistance level before, obviously this was what you're expecting. If you're a price action trader, you want a double top like this. You don't expect to break above it, right? But price did what? Instead of coming down, price went above. So it's like, oh, what the fuck is that, right? And the fuck up is that he hits your SL and it now starts coming down. At times like this, you tend to feel like, now my village people, this kind of thoughts you have in your head, like, which kind thing be this? If you lost the trade, fine, you would have just felt, okay, let me just move on to the next thing. But this time around, you lost the trade and then price went according to your plan. I'm sure many of us have experienced this a lot. That is because that area is an area of liquidity. You could have felt like, why didn't it just continue coming down? Why didn't it just come down straight up from this zone? Why hit my SL? Why kick me out first? That is because the big market movers target these liquid zones, all right, and take out traders before it moves. Did you get that? So imagine you're not satisfied with that kind of thing, and maybe you follow this trend a lot, and then you mark out this as a triple top, right? Triple top like this. Look at what happened. Price did what? Price broke above it, hitting you out of the zone. And you know the worst thing that could happen to anyone is you being kicked out and price going out according to your plan. So it's like you knew already it was going to sell, but price kicked you out first, and then it now started selling. Look at what happened here. Look at this. thought top, you have thought price should just sell from here, but instead price did boom, and then it now started falling. You know, after you took your money, if you don't have proper risk management, you could have been kicked out. Some patron traders would even have lost their capital at this zone because some would want to shift SL because you are so certain this is a triple top and all that, right? And you know, before you know it, you blow your account. Do you get that? Now, these are because these are liquid zones where retail traders tend to put their entries and also their stop losses. Do you get that? All right. Look at another one right here. This is also a top right here, right? A resistance level that was taken out first. Did you get that? Imagine you wanted to enter this kind of trade. You would have placed your entry, maybe you entered from here. I'm coming. You could have entered maybe when you were seeing something like this. You entered here and your stop loss maybe a few pips above, and then look at it. Price hit your SL and then gave you those nice profit. Whereas your trader has been taken out. You already lost your money. Do you get that? Now, these are zones that we call liquidities. All right. Let's look for an example of a trend line that was taken out. Let me look at another trade. Another hold on. I'm sorry. Obviously this is a trading session right now, so I'm just trying to, make good use of the time. Then we have our class. All right. Let me give us. I can see a nice trend line right there that we can use for our example. All right. Now look at this. Obviously you see something like this and you're like, oh man, nice trend line. Or let me use this. Let me use this. Yeah, let me use this. All right. Now I think let me come to 30 minutes time frame so that we can all see that clearly. Now look at this. I used to tell you that before a trend line can be valid, you must have at least two swing points. All right. Now look at this nice strategy. Number one, you add point A right here, the beginning of the trend, right? And then you add point B here, right? You add point C again, right? Are you getting it? Now you'd have felt, oh, this thing should just touch this trend line again, and then you move and look at what happened afterwards. Price kicked you out. Is it that you don't know what you're doing? Is it that you're not a good trader? No, that is because that trend line is liquidity. Do you get that? So most times, many traders tend to trade like this. Most times you set your SL just below it, and then boom. Now imagine something like this. At this point when you wanted to buy, you would have expected, price to, maybe you were targeting this resistance level or something, right? And price kicked you out. Look at what happened afterwards. The bullish trend you were trying to catch also happened here after you were kicked out. Do you get that? It happens a lot of time in forex, whereby it's not your fault. It's not that you don't know what you're doing, basically. But the thing is that that's your entry, that's your strategy is a liquid zone, and you are being liquidated in the market. Do you understand that? Do you understand that? So now I think it's now getting clearer now, right? It's now making sense now, right? Now, so if I now say that we should not enter with liquid zones, and we shouldn't use our trend line because they're too risky, because you might be kicked out, and I'm telling you, don't use support and resistance levels because they might not work out. Double top, double bottom, it might not work. I'm not saying all trades, all of these strategies are to be avoided. No, there are some zones that are not liquid enough. Don't get me wrong. All right, double top work wonders. Double bottom is a very nice strategy, right? Trend line is very simple and straightforward, good enough for anybody, any beginner to make good money. All right, but what I'm saying is that sometimes they might not be liquid enough for the big guys to take it out. Do you get it? But most times you tend to fall into this trap. Most times you tend to how do I put it? You tend to have this kind of overconfidence in yourself, in your strategy, because you saw this nice, resistance level, and then you're like, oh man, this thing should work, oh, nice double top, oh, nice double bottom. Some people say something like a strong support level, a strong resistance level. Oh, price has been retested that zone and it didn't break it. Oh man, it's not like strong zone anywhere. All right, baby, just wake up. Now this thing is that you have to sometimes be able to tell yourself, is this zone liquid enough to be taken up? All right. And then another thing is that you must also have confirmations, because before price kicks you out, there will definitely be some confirmations. There will be some signs. Let me put it that way. Before you see that double top being taken out, look at this. A very nice example here. This was the top, right? This was the top here, right? Right. Now, when you saw this bullish candlestick coming like this, so impulsive, it should already tell you that whatever limits you've got here, you should just exit. All right? Because you should tell yourself that no, this is not a rejection candlestick. Your entry is not confirmed. Do you get me? I believe you understand that. So most times the question comes into, how do you identify a liquid zone that is going to be liquidated? Sometimes most trend line works wonders. Like even for you see trend lines on bigger time frames, like 1 day, 4 hours, and they are working wonders, right? Some of the 5 minutes, 15 minutes, 1 hour, 4 hours might be liquidated, but it all comes to you playing safe of the market. Now, there are ways whereby you can avoid liquidity as well. There are strategies you can use, like order block confirmation, like FEGs, and you being able to use them to enter your trade. We are going to be talking about that in the next class, in our next video. All right. So, but today we want to be able to study and identify liquidity. Do you understand? So such that in a way whereby you're not just freaked out. Sometimes you're not, okay, like I was saying, now this is a trend line right here, right? That has not been liquidated. Price is still following, right? And a normal trader like me will also want to enter from here, right? You would enter from zones like this, but this is liquidity. All right. And then before you know it, the big guys, the big market movers know that your SL is placed somewhere around here, all right? And then they take you out. Are you getting it? That is why I say that you are the liquidity of the market. Do you get that? All right. So that will be at the end of today's class. I will see you in our next video. My name is Isaac. I love you all. Bye bye for now. Now, if you gain something from that and you like this, I would like you to please like and subscribe to our YouTube channel, and please comment. If there's the link for our free signal channel as well. If you want to learn more, I'm going to be teaching you other strategies you can use instead of being trapped in a liquid zone like this. All right, stay tuned for next video, and I will see you then. Bye.